Good morning, everyone. How's it going? It is an hour into the market session on September 12th. We just had a little earthquake. It was a lot of things shaking, but nothing, no damage, obviously. It was just a baby earthquake. So this morning, so far, we've just kind of moved, chopped a little bit. We can see that the SPY traded down near the EMA 8, and then it has since recovered, maybe gone a little bit higher above the open, really just choppy sideways movement. The big news report today was PPI, but that was kind of in line. We didn't quite hit according to EconoDay. We are right on consensus. Well, maybe the ex food and energy went up a little bit more than expected on the monthly basis, but it's pretty much in line. And so this didn't really give us much of a catalyst. This morning, when we came in, the bonds on that report initially sold off, and then it recovered, and then it came back down. And then in the markets, in the QQQ and SPY, we sold off and then recovered, not quite as high as when we started. And then we started selling off. But during the session, you can see that after the initial sell off, we've recovered. This is pretty normal pattern. Right now, we haven't seen a real direction in the market yet. We just come down, come back up. We're kind of floating above or below that open price and really just chopping back and forth on it so far. So we haven't gotten any directionality yet. If we look at our sectors, we can see that since the open, nothing really leading. I guess SMH is the only one that is starting to break out and look like it's separating from the pack, separating from the S&P 500. So we'll see if that keeps up. And the theme after yesterday was risk on, but we want to keep that in context. We can see that yesterday we popped up above all of these resistance, all of the moving averages, and we continued, and it acted as support this morning. So that's a positive sign that we can continue to move upwards. But we do have the rate cut decision happening next week on Wednesday. So we're probably not going to have a lot of room to move up. We can move up and match these highs, maybe this all-time high right here, but I wouldn't expect us to make a new high in the coming week. We're probably just going to ride this out, see the enthusiasm, and then see what happens with the rate cut. With the CPI and the PPI reports that just came out, it makes a rate cut less likely, or at least a 50 basis point rate cut a lot less likely. So we already saw the movement to 85% probability of 25 basis point rate cut. Let's see if that changed this morning. Yeah, no, a little bit, 87%. So we're still pricing in 100% chance of a rate cut. And I don't know. I don't think there should be a 0% chance of no rate cut. I've made my feelings and my opinions really clear. Nothing about this has changed my opinion, except for now it seems a little bit even more probable what I was saying. But we'll see. We'll see. I think if we do get a 25 basis point rate cut, it's going to be highly political. There's going to be some complaints by certain parties, and it's going to put the Fed in a spotlight, and they're going to have to explain themselves because they said they're going to cut rates because inflation's under control. Well, we've seen in this report that it's really not. We're at the same place that we were a year ago. We haven't made any progress. And in certain measures, in certain instances, it's actually gone up a tiny bit from a year ago. And then the shift of focus that they were talking about to the jobless claims, to the job market, well, if we look at our initial claims, we can see that our initial jobless claims are right on target, and our continuing claims are right on target. And our initial jobless claims, they're low. They're pretty low. They're historically, from a historical perspective, that's low. It's not the sign of a economy that is struggling. Of course, there's a lot of fear right now of a recession, but those are fears based on the Fed's action, not based on the actual economy, at least not yet. So whether or not we're going to get a recession or we're going to get that soft landing, or that we're already in a recession. History will tell us that, but it does look like that things are going to start falling apart. And if you're getting deflation because of lack of demand and not from the supply side, that is a very dangerous position to be in. That is very, very, very bad. That definitely speaks of a recession and a pretty bad recession. What the Fed was trying to do is not just reduce inflation, but reduce it from the supply side perspective, not from the demand side. If people just can't afford things anymore and people stop buying things and therefore prices stop dropping, that's not good for anyone. So we'll see. We'll see what happens with that Fed decision next week. And if we do get a rate cut of 25 basis points, well, the market already knows and that's priced that in. That's why we're moving up. That's why we moved up from here. So is it going to send us even higher? We might make a new all-time high, but there is a lot of signs in this economy right now that we're on shaky ground. And so I would expect that movement upward to be short-lived, even if we do get a 25 basis point rate cut. If we don't get a 25 basis point rate cut, we're going to undo a lot of this movement. And if we get a 50 basis point rate cut, it could go either way because people are like, oh, that's a little extreme this time. That's a little too much. There's only been two 50 basis point rate cuts in history. Are we warranted? Are we justified in cutting 50 basis points? If we cut too fast and then we have to raise again just immediately afterwards to correct it, that does not bode well for markets or the economy. That would actually cause a lot of volatility and a lot of potential for downward movement. So we need to get the number right. And if we get the number right, if we get the 25 basis point rate cut, at best we'll move up a little bit. We're not going to get amazing new highs. At least that's what it looks like right now. But if we don't get the rate cut or if we cut too much, then that could send markets downwards. So right now there is still a lot more risk to the downside than there is to the upside. And even though we're bullish for this week, I still want to be careful. I would still want tail risk trades or hedges to the downside. I won't get overly enthusiastic. At best, I would keep my portfolio neutral. So let's take a look at how things are looking. Yeah, it looks like we might be start shifting to upside bias today. We did bounce off that VWAP. That's not something that happened this morning when we challenged the VWAP to the downside. Here we had a huge bar downwards, and at least we bounced off of it. So we'll see. We'll see how this plays out. For now, it looks like that we're just going to have a choppy day sideways. No all-star sectors, maybe SMH, but you can see that's coming back down. So I would just be very careful today. Just expect a lot of chop.